Hey everybody, Courtney Smith here. Happy Independence Day, financial Independence Day, I hope. It's July the 6th, and we've got another week of wonderful Wall Street winners. All right, but first we have to read this. I'll just leave this on the screen for the next half hour, and you can really study it. Okay, I was a bit bearish last week. I'm a bit more bullish this week. All the indicators that I talked about last week remain negative, but there's some things that have perked up on the bull side. So guess what? We're kind of betwixt and between. So what do? We'll just stick with our current strategy, which is making us money, and that's the bottom line. So let's take a look here at the S&P. S&P rallied just about every day last week. It was kind of a feeble rally, but a rally nonetheless. But look at the purple predictor. Unbelievably strong, showing that the smart money is taking advantage of this dip in the marketplace. And if the smart money's buying, I got to be sitting here saying, okay. So I think we're actually in a phase where we're going to start to rally. The increase in COVID cases has now been discounted. They kind of said, okay, well, that's nice. COVID cases are up, but hospitalizations, not really, and deaths are going down. So you know what? Maybe this is no big deal. And by the way, that unemployment number was fantastic. And I think that's what the market is looking at right now. Dow Jones. Now, this just shows you how betwixt and between we are. Here, take a look at this. In the upper right-hand corner, the little red line and the little green line are basically the same, meaning the buying pressure and the selling pressure is exactly the same. But I showed you on the previous chart that the smart money was buying. That means in order for that to be the case and this be the case, the dumb money must be selling. Whenever you have a situation where the smart money's doing one thing and the dumb money's doing the other, you go with the smart money. And right now, the smart money's getting longer. NASDAQ breaks to new all-time highs. Seasonality, we're going to have to call it neutral. We are in the neutral period for the stock market as a whole. Utilities should be bullish. This is a bullish period for utility stocks, but we're not in a bull market. So until the market confirms that we're in a bull market, confirms that we're in a bullish seasonal, we'll just pass on the utilities as well. From Stock Traders Almanac, they say that this should be a pretty neutral period in the market. The Fed has targeted the yield curve, but I believe that they've targeted it at too low of a level, and I think that we're still living through the effects of the negative yield curve from last year. Asset allocation, about steady right here. Stock market risk indicator, about steady here. Global shares, weaker than the U.S., so that I find a little interesting. If you're a global investment manager, you're going to put your money in the U.S., not in Europe. And Europe is what dominates this index, okay? Japan's in there as well. But the U.S., I know it doesn't feel that way to Americans, but America does have the most dynamic, bullish economy right now. Pretty scary, isn't it? Bonds sold off most of the week, but the purple predictor is still bullish. We're still in a bull market, but it's going to be a very, very sluggish bull market. I'm long bonds now. Who cares? Not really making any money, not really losing any money. But nonetheless, look for bonds to continue to rally slightly. With the Fed targeting the yield curve, they're not going to move a lot. But I'm using them partially as a hedge against any bear market. So they're there. If I can break even on my insurance policy, I'm way ahead of the game. Bond key factors are remaining about steady to suggesting higher interest rates, but the Fed's targeting them, so they are doing what's called interest rate suppression. They're suppressing interest rates, even though the market forces would make them higher. And in my opinion, they should be higher, which would give us a more positive yield curve, which would stimulate the economy. But the Fed, what can I say? They're just orthodox economists. What do they know? At least what do they know about the real world? Okay, dollar very, very steady here. Now, gold, as you know, I'm bullish on gold, and we're making higher highs, and I'm long gold. I'm trying to buy gold stocks, but I'm long gold right now, looking for a sluggish bull market. Not a wild and crazy bull market, not yet, but a sluggish bull market. But hey, we'll take a bull market any place we can get it. So I like the gold market here. Gold is leading the gold shares. A lot of the gold shares that I have buy orders in have not been filled yet. In other words, I was buying them on buy stops, but the market hasn't been strong enough to trigger buys. But here, gold is clearly at the highest level it's been in years. Gold stocks lagging behind a little bit. So one of the most basic principles of trading is buy that which is strongest, sell that which is weakest. Right now, gold is the leader to the upside, so I am bullish on gold. Our gold key indicators, though, here are pretty neutral to slightly negative, but the most important one, which fully paid up members have access to, is bullish. Crude oil, grinding higher, pretty amazing, a little bit stronger. As you know, I've been hesitant. Let's put it this way. Now we got that giant gap left back in March. I'm kind of using that as a technical trigger. I also want to point out, notice the little green line. The little green line's in a bear market, even though prices are in a bull market. The little green line is the momentum of the market as measured by the relative strength index. And when you get that momentum fading like that, you usually get a bit of a bear move. Not a big bear move, but a little bear move. Bitcoin, I told you we turned bearish last week or the week before, but definitely last week. And as you can see, it continues to drift lower. Not real excited about shorting it, but I think Bitcoin's going to probably drift down, to about let's call it 7,000 to 8,000. Let's say 7,500 would be a good objective to the downside. All right, freebies, thank you for joining us. We always appreciate you. Fully paid up members, hang on just a second because I've got some very cool new things to show you. Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature, that's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.